that you can lend money to Nigerian companies and the Nigerian government, and you can earn up to 20% interest within a year or sometimes less than a year. Are you interested? Come closer because I'm about to give the full details, nothing but the full details in this video. If you are someone who likes to keep things low, you have little to zero tolerance for high risk investments, then this video is for you. Also, if you are someone you're already into stock investing, but you also would like to diversify into other forms of investment, keep on watching this video. It is almost impossible to ignore the PR stock investing has been receiving this past month, mostly because it is that time of the year when companies release their past year performance. So in this case, they are releasing their 2025 financial statement. So investors get to see how much the company performed last year and also get to make a decision about investing in the same company this year. Another feature of financial statements, past year financial statements, is that companies can decide to part away with profits, in which case they declare final dividends after they might have declared interim dividend in the last year. So that is currently what is happening now. Also, we have the Q1. Q1 just ended in March, and most companies are also coming forth with their Q1 results. Everywhere it seems like everybody is talking about stock investments. Most people have even shared their portfolio online. Most people share good news of receiving their dividends. Last month, which is April, GTCO, Waco Lafarge, that's Lafarge Cement, they paid dividends last month. And apart from dividends, investors are also happy in terms of capital appreciation because most of the stock prices have actually re-rated and there is a upward movement in terms of prices. But that's aside, this video is not about stock investment. In the grand scheme of things, it is very easier to get carried away, to get distracted by the loud noise of the returns most people are making in the market, and then we ignore the underlying risks. Again, your risk appetite must match your type of investment. So if you have a high risk appetite, oh well and good, you can do stock investments. If you are scared of taking risks and you cannot afford to see your investment reduced by 20 to 30%, then your exposure in the stock market should be very, very limited, and you should also seek knowledge. I mean, expert knowledge on the stock or ETF to invest in. Hi guys, welcome back to my YouTube channel. This is your first time. My name is Adereke Lawal. I'm a legal practitioner and I major in capital market operations. What do we do on this channel? We talk about what to invest in, how to invest, and most importantly, where to invest your money for potential return in 2026. If you are new here, please subscribe. If you are here to subscribe, if you are a returning viewer and you are here to subscribe, please, what are you waiting for? Please subscribe. Very first one I would like to explain is what is known as commercial paper. So in simple terms, just think of it as a basic loan. Companies have come to borrow money from you to fund their short-term working capital, and they are promising you a certain interest in return. So in less than a year, within a year, they are going to return your money with a certain interest. Currently, it is now between 90 to 20 something percent. What usually happens after they must have been done with the legal documentation and they have the approval to go on with the issuance is that they release a particular notice. On the notice, you see the tenure, you see the percentage they are offering for interest, you also see their rating. So rating is just their scorecard. So think of when you were in secondary school, you did your WAEC, and for your WAEC, if you have A1, it means that you've done excellently well. If you have B2, it means that you've done well but not so excellent. If you have C, average. If you have G, that's almost a fail but not a fail. If you have F9, then that's a fail. Similarly, we have companies that actually score companies based on their credit worthiness, which means that based on their capability to borrow money and return, and maybe based on their past borrowing history. If you save on any of these fintech applications like Piggyvest, Carrywise, Economy, and the rest of them, there's a likelihood that their portfolio consists of commercial papers. So most money market fund consist of commercial papers. So if you are investing in a money market fund, you are indirectly investing in commercial papers. So instead of leaving your huge amount in your commercial bank account, think of investing in commercial papers if you need the money within a year or in less than a year. So how do you invest in commercial paper? Very, very easy. So originally, you have to contact an asset manager because they are typically in charge of the offering. But nowadays, we have applications where you can invest in stocks. We have mobile applications that you can also download and invest in commercial papers. So number one I will recommend is Get Equity. The second application I will recommend is Ladder. So on this application, all you have to do is download, register, complete the requisite KYC process, and then start investing. And the good thing is that for traditional asset managers, they typically ask for minimum of 5 million naira. But for these applications, the minimum you require is 100,000 naira. So if you have this money, you can just get started on these applications, wait for maturity day. So easy peasy, download the application, fund your wallet and invest in commercial paper, and in less than a year. So typically you can have 90 days, you can have 270 days, and more recently due to the new SEC rules, we now have 365 days. So all well and good, you can invest in commercial paper. It is low risk, very easy, doesn't require you to do much research. All you have to be concerned is the company's rating. Is their rating good? So the good ratings are usually like when you see A, you know it is good. When you see BBB plus minus, you know it is good. So, and it is usually good when a particular issuance has 2 ratings. So that simplifies, and those 2 ratings are good. That simplifies a go ahead. Also, you can check the series. So typically companies come out to raise money through commercial paper at different times. So you can have series 1, series 2, series 3, series 4. So when you're seeing the company come out and you're seeing series 5, series 6, it means that they've issued in the past. So it is easier to trust companies that have issued commercial papers several times, because that way you can easily do your research whether they've defaulted. But commercial paper, like I said, is generally low risk, easy, and just wait till maturity date and enjoy your returns. So the next one is bonds. Like I said, just think of it as a loan. So commercial paper, bonds, notes, all of these terms are created based on the structure of a particular transaction, tenure, and the peculiarities. So think of bond as the big brother of commercial paper. Like I said, for commercial paper, it is usually within a year or less than a year. It's a really short-term debt instruments. On the other hand, for bonds can be for years, and it can be for 2 or 3 years. So bonds typically have like a longer tenure or longer maturity dates. So similar to commercial paper, you also have the offer document for bonds, which also stipulates what the bond is for, whether it is for short-term or long-term working capital, or for a particular project. If the bond is issued through an SPV, an SPV means that a standalone company is incorporated for that particular project or transaction. So the offer document tells you all the details you need to know about the bond, about the loan. So it tells you how much they are paying in return. It tells you if there's a collateral, we call it security. So all of these details are contained in the offer document. So it will help you make an informed decision whether it is an investment you want to take. So the popular one is the FGN savings bond, which means that you are lending the Nigerian government's money. And usually the FGN savings bond usually released every first week of every month. And the good thing about the FGN savings bond is that interest are paid quarterly. So for instance, we have the 2-year bond, we have the 3 years bond. For the 2-year bonds, it means that you get returns paid to you 4 different times, and also the 3 years quarterly, like that. And at maturity, whether it is 2 years or 3 years, you get whatever you've invested in the bond back. You get your capital back. So how can you invest in bonds, specifically FGN savings bond? The same thing that applies to commercial papers applies to bonds. So you can also invest in bonds through mobile applications. The one I recommend is AfriInvest, FreeInvest 2.0. You can also invest on Get Equity. And the good news is that you can divest with as low as 5,000 naira in the FGN savings bond. This is the end of today's video. If you like this video, please give us a thumbs up. If you are yet to subscribe, please subscribe. Also, if you want me to talk about any form of investments or something you've been meaning to ask an investment expert, please drop it in the comment section. Also, if you've learned anything at all in this video, please put it in the comment section. Please like this video. It helps push the content to God people that, and by doing that you are doing the Lord's work. So tell a friend, tell a family to subscribe to your financial paddy for more insights of money.